Good morning, everyone. This is JC de Guzman for our daily top 5 gainers and top 5 losers analysis for June 27, 2019. I'll be discussing 10 different stocks, and then I'll give you my technical analysis followed by my overall sentiment and recommendations for the next trading day, for the last trading day of the week, Friday. So everything that I'm going to say here is for short-term trading purposes. Beginning with, let's start with FGEN, an index company or index stock. So FGEN closed today at 27.05. It broke above its previous resistance at 26 pesos per share, which is now acting as its current support. So where is the resistance now? The acting resistance. It's at 31.4. It's a historical resistance at 31.4. So I'm still seeing a perfect bullish alignment among its three simple moving averages. Volume is very impressive. MACD is still moving above the 10 SM. Yeah, the MACD is still moving above the signal line. The conditions of our 10 SMA and MACD combination remain true. The upward momentum remains very strong. Risk level is still on a. It still has a low risk level with its volatility score of 47%. I'd like to highlight that its RSI is approaching the classical overbought level. So for those who have had FGEN for a few weeks already, maybe you would like to prepare uh, or closely monitor your FGEN as profit taking may arise once RSI touches the classical overbought level, perhaps somewhere near 27.5. So get ready. Now, for those who are planning to enter a new position because of the bullish signals on FGEN charts, I'd like to consider that thing that I mentioned about the RSI of FGEN. Of course, you will have to calculate your reward to risk ratio with your support at 26, with your resistance at 31.4. By the position of the last candlestick of FGEN, of course, you will get uh, a thicker potential reward than your potential risk. But again and again, consider what I mentioned about the possibility uh, that may happen once RSI touches the classical overbought level. Let me show you FGEN's trade and volume distribution chart. The dominant range is between 27 to 27.2, or we can say 26.95 to 27.2. It's in favor of the buyers. I am bullish. This should not be an alarming situation for those who have had FG for a few weeks already, but for those who are yet to enter, you got to think twice. Consider those possibilities. The possibility of seeing a profit taking happening above 27.5 or whenever RSI touches the classical overbought level. Okay, consider that. By the way, foreign investors remain net buyers on FGEN for the past since for the entire month of June. They have been net buyers of FGEN. Next on our list is Arbuckle. ABA closed today at 0.93. Support is at 0.86. Resistance is at 1 pesos per share. So today it broke above 0.86, its previous resistance, which is now acting as its current support. The conditions of our 10 SMA and MACD combination remain true. I'm still seeing a perfect bullish alignment among its three simple moving averages. The classical, the upward momentum is still very strong. I'd like to mention that Arbuckle already has a high risk level because of its historical volatility score of 83%. Take note of that. RSI has already touched the classical overbought level. So prep up. Guys, those of you who have been trading Arbuckle for a while already, pay extra attention on the movement of the price of Arbuckle by the second. I do hope you have the time to do that. But if you don't have the time to do that, make sure that you lock in some profits already. Lock in some profits already. Sooner or later, massive profit taking may happen uh, between 0.9 to 1 pesos per share or 1 peso per share, unless, of course, unless there's still more gas for Arbuckle to break above 1 peso per share. Anyhow, you should be fine for as long as you have a trailing stop loss in place. Okay, so consider those possibilities, guys, for those of you who are planning, who are yet to enter a new position in Arbuckle. And I suggest by now, if you are a newbie, I don't encourage you to pick Arbuckle as one of your guinea pigs, so to say, if you are a newbie. Okay, if you are a newbie, I suggest that you pick stocks that don't have a high risk level. I'm referring to stocks that have a historical volatility score that's below 50 as much as possible. And of course, and those stocks that have an attractive reward to risk ratio. Okay, here's Abacor's dominant range. It's between 0.92 to 0.95. 0.92 to 0.95 in favor of the buyers. I remain bullish on Abacor. Take note of those things that I have advised you guys, those who have had Abacor and those who are yet to enter on this stock. Okay, next we have Pepsi. PIP closed today at 1.7. It broke above its previous resistance at 1.55, which is now acting as its current support. The immediate resistance is now at 2.13. The conditions of our 10 SMA and MACD combination remain true. Historical volatility is at 64%, thereby giving PIP a moderate risk level. The upward momentum remains strong. I like the size of today's bullish volume. FYI, RSI has already crossed above. It's already above and beyond the classical overbought level or of PIP. So those who are planning to enter a new position in PIP, think twice. Think twice before you do a test buy. If you are really bullish on PIP, I suggest that you buy in tranches. Okay? You buy in tranches. Don't put all of your money in one go. Okay? The dominant range of PIP is between 1.6 to 1.7 in favor of the buyers. I am bullish on PIP. Guys, take note of your trailing stop loss, please. RSI is already above the classical overbought level. GSMI, the next stock in the list is GSMI. It closed today at 63.5. Support is still at 44.5. Or we can say that the support is already at 56 pesos per share. Somewhere here. Somewhere here. And then followed by 50. Followed by 45. How about the psychological resistance? It's in confluence with a 61.8% extension of our up Fibonacci, and that is at 85.25. I'm seeing a perfect bullish alignment among its three simple moving averages. This is an indication of a strong upward momentum as confirmed by the ADX score of 50 points and 58. I think it's 58, yes. The upward momentum is very strong. The conditions of the 10 SMA and MACD combination remain true. However, RSI has been playing. It has been playing inside the classical overbought level. So this is a perfect setup for those who managed to enter a position on GSMI last in the second week, first to second week of May. Okay, for those who entered a new position on GSMI either in the first week or second week of May, this trade setup is particularly for you. This is quite risky already for those who are yet to enter, especially that GSMI already has a moderate risk level due to its volatility score of 60 1%. Consider that, guys, for those of you who are planning to enter a new position, aside from calculating your reward to risk ratio, of course. So the dominant range with respect to the closing price of 63.5 is between 62.9 to 63.5. It's still in favor of the buyers. So I am bullish on GSMI. I see no, those who have had GSMI should not be stressed. You should not be in a stressful situation. Those who are planning to enter a new position should think twice. Okay? Think twice. Next we have Z. So this is stock close today at 0.33. Support is at 0.31. Resistance is at 0.42. It broke above its previous resistance at 0.31, which is now acting as its current support. The conditions of the 10 SMA and MACD combination remain true. Okay, the upward momentum is still not, it's not yet very strong, although the positive DMI is above the negative DMI. Meaning to say, the bulls are not yet in complete control of the situation. Nonetheless, I like the height of today's bullish volume bar. Let's take a look at the trade and volume distribution chart of Z to check if the 4-point criteria are all present. With respect to its closing price of 0.33, the dominant range is between 0.32 to 0.325. Okay, 0.32 to 0.325. I am not bullish on the trade and volume distribution chart of Z. I'm more like a neutral. I'm seeing a neutral sentiment on this chart. Okay, so for those who have had Z, you can enter and you can top up on your position, but I suggest that you position a little bit conservatively below 0.32. Perhaps include 0.315, 0.315 all the way to 0.325 instead of just 0.32 to 0.325. Okay, be a little bit conservative when it comes to if you'd like top up on your position in Z. Now, how about those who don't have Z yet? Yes, you can also do that, but I suggest also that you push back a little bit conservatively all the way to 0.31, 0.30, 0.315 to 0.325. Okay, I remain bullish overall. Okay, overall, I'm bullish on Z. Let's see tomorrow if we're going to see a continuity or a continuation of this green candlestick. Next, we have RRHI, an index company. It closed today at 73.7. Support is at 68.6. The major resistance is at 90 pesos per share. But of course, we should be able to get a midterm resistance here. And the midterm resistance that I'm seeing is near this area at 76.8. Okay, that's your midterm resistance, and you can also consider that you have another one somewhere. Let me plot that line. 82.15. 82.15. However, the conditions of our 10 SMA and MACD combo have already been invalidated. MACD already registered a death cross below the signal line. The negative DMI already crossed above the positive DMI. So the other indicators are downward sloping, meaning to say, don't top up yet, don't enter a new position. If you have RRHI for short-term trading purposes, make sure that you sell once your trailing stop loss gets hit. Do I see a data-driven reason to preempt your trailing stop loss? Well, none yet. I don't see a compelling reason to preempt your trailing stop loss simply because today's volume is today's volume did not engulf, meaning to say it's not higher than the past uh, it's not higher than the daily volume of the past week at least. Okay, so there's no data-driven reason to preempt your trailing stop loss. The dominant range for today is between 73 to 73.7 in favor of the sellers. I am bearish on RRHI. Okay, next we have WLCON. It closed today at 17 pesos per share. Let's see if it will maintain its position above 17 pesos per share. Otherwise, the next support is positioned or waiting at 15.8. How about the resistance? The resistance is at the 61.8% of the up Fibonacci, which is at 18.2. Okay, RSI is still quite distant from the classical overbought level, so I think this red candlestick today is a technical correction. But since it's Friday tomorrow, there's a big possibility that we might see another red candlestick given the size of today's volume also. But I'm just speculating, so might as well stick with your trailing stop loss if you have had WLCON since when, since you entered a new position, or since you caught the satisfaction of the conditions of our 10 SMA and MACD combination. I'm still seeing a perfect bullish alignment among the three simple moving averages of WLCON, by the way. So if it maintains its position above 17 pesos per share, that's good in favor of the bulls. Okay, the upward momentum remains very strong, by the way. So the trade and volume distribution chart shows that the dominant range is between 16.92 to 17.08 in favor of the sellers. Even though my overall sentiment is bullish on WLCON, I do not suggest topping up yet. I do not suggest entering a new position yet. Okay? Next we have CA, Class A, Concrete Aggregates Corporation Class A. It closed today at 88.9. Support is at 77. Resistance is at 109 or 110. I do not suggest trading CA. Why? There's a volatility issue, a volume related concern. Personal disclosure, I'm not interested on stocks that have volatility concerns. Okay? So I'm not going to talk much about this stock because I myself am bearish on CA. Okay? But for what it's worth, let me show you the dominant range. So here's how it looks like. The dominant range is between 88 to 90 pesos per share in favor of the sellers. So do not trade. I don't suggest trading CA. There's a volatility related issue. Next we have TUGS. TUGS closed today at 2.19. Support is at 2.18. Wow, one tick away from breaking below the support level. Resistance is at 2.74. Okay, so where are we going to catch TUGS should it break below 2.18? The next support, or the support below 2.18, is at 1.39. It's quite deep at 1.39. So let's see tomorrow if it will maintain its throne. Okay, so let me now show you TUG's trade and volume distribution chart. The dominant range is between, with respect to its closing price of 2.19, the dominant range is between 2.19 to 2.23, 2.90 to 2.19 to 2.23 in favor of the sellers, unfortunately. So do not top up. Of course, you're not going to top up because we did not see an attractive buy signal in the past few months on TUGS chart. So for those who are planning to enter a new position, this is not the right time yet. Postpone that plan. You're better off postponing that plan. Okay, next we have PX. Last in our list, we have PX. It closed today at 3.57. Okay, 3.57 with the resistance at 3.8. Support is at 2.8. Okay, it's still moving above its 10-day simple moving average, by the way. MACD is still moving above the signal line. So the conditions of our 10 SMA and MACD combo remain intact. Make sure that you know where your trading stop loss is. If you manage to trade PX for the first, if you manage to enter a new position sometime in the first week of June, do I see a data-driven reason to preempt your trailing stop loss? Yes, I do, because of the volume. It's almost equal to its 10-day volume average. Okay, so what does that mean? So if you have PX and you have a positive PNL, positive profit loss value, I suggest that you sell a few tranches. Well, that is, of course, if your total holdings of your PX is uh, divisible by a few tranches. So don't sell in tranches if the total amount of your holdings on PX is less than 20,000 pesos or 50,000 even. Okay, you're going to it's not going to work to your advantage because of the taxes and fees. That's why you don't just decide that easily to divide your total holdings or your position into multiple tranches. Do not do that if it's less than 20 to 50,000. Personally, I don't trade in tranches if my capital is less than 50,000 pesos. Okay, that's a personal disclosure. Okay, let me show you PX's trade and volume distribution chart now. With respect to its closing price of 3.57, the dominant range is between 3.56 to 3.6. It's still in favor of the sellers. So my overall sentiment on PX is now still bullish, although it's still bullish based on these indicators. And this despite the dominant range being in favor of the sellers, I'm still bullish on PX. That's my overall sentiment. But if you have PX, do not top up. Either you hold your position if it's still trading above your trailing stop loss, or you preempt your trailing stop loss by selling a few tranches, by locking in some of your profits. That's what it means. And if you don't have PX, don't enter yet. Not yet. At least wait for the appearance of the 4-point criteria if you would like to enter a new position. So those 4 points are all absent now. Okay, so you've heard my technical analysis and overall recommendation and overall sentiment and recommendation for today's 10 stocks. If you have follow-up questions, please ask in our private clients forum. Thank you and have a great trading day, last trading day of the week tomorrow. Bye for now.